Hello everyone, it's none other than your boy here, Chatmaster. I welcome you all to Chatmaster FX. Those who were following all the tutorials that I've been posting on this channel, you realize that we had only left with one standard operating procedure in order for us to complete our course. So I can say congratulations to you all who have managed to do this course, and I hope you have learned something and your trading has changed. The main purpose of our trading at Chartmaster FX, we want to know where the price is and where the price is more likely to go. So if you look at all the standard operating procedures that I was presenting to you, they are centered on that ideology of wanting to understand the dynamics of the movement of the market. I don't like gambling. I want to know what is really happening on the market. So knowing where price is and why is price where it is, and also being able to do a prognostication of where the price is more likely to go, then that's the kind of trading that we'll be wanting, guys. We don't want gambling, guys. We don't want to take chances. We want to understand what will be really happening on the market. So we have this statement, the Chartmaster FX, which says, let the market follow your drawing. So you do your prognostication and wait for the price to follow the prognostication that you have made, guys. And once you practice that, you realize that as time goes by, the market will start to follow your drawing indeed. So guys, the flag limit concept is actually forms the epitome of our trading at Chartmaster FX, and it has got a wide application. We can use the flag limit when we are looking at the quasi models, when we are looking at the diamonds. Guys, this concept is complex. It's not easy as you may see it, guys. It's just because the Chartmaster has managed to try to simplify it so that it can be tradable to you. But however, this concept is complex, guys, and it is the foundation of our trading at Chartmaster FX. The flag limit and the FTR, those two things, guys, they have a wider implication. So I don't want to complicate things here. I want to make things simple so that you guys can be able to start to trade the standard operating procedure on the market. So let's look at the anatomy of the flag limit. So guys, the first thing that you need to take into consideration is for you to look for a resistance line or a resistance level. Once you identify a resistance line of one touch or more, then you can draw your resistance line. Once you have your resistance line, then you wait for the price to come to that resistance line. Once the price comes to that resistance line, you wait for the price to break the resistance line. Once we have the break of that resistance line, you wait for the price to engulf it. As we see an engulfment in the resistance line, then you wait for this high to be broken. Once this high is broken, then you see that the market will have made what we call a rally base rally. So before that rally base rally is formed, the price must do a drop, a rally base drop. So once we have a rally base drop here, then you can be able to mark your resistance level. So as the price breaks this high, then from there you can be able to draw your kink. This is what we call a kink, guys. This zone that you see here, this base that you see here is what we call a kink. So we expect, as usual, that when the price is approaching this base, it should show some signs that it is about to land, guys. An aeroplane does not just land, guys. It reduces the speed when it's about to reach the airport. So the characteristics of price also needs to be aligned with that. So this might be a 3 drive where there's a fake out, where there is a compression plus liquidity, where there's a compression. You need to look for an approach before you trade that SOP. If there is no approach, then no trade, guys. So I hope it's making sense to you. Just a recap, we need a drop, base, a rally, base, drop. Once we have a rally, base, drop, you draw your resistance line. Once you draw your resistance line, you wait for the price to come to that resistance line, and it has to break it. Once we have a break in the resistance line, you wait for the price to drop. As the price drops, it then engulfs this resistance level. Then finally it breaks this high. Then we can consider this as a flag limit, and you wait for the price to do a first time visit to this kink area. Then you place your trade there. So when we are looking at the theoretical application of the flag limit, guys, this is what we call the kink area. Then this is what we call the flag limit area. The flag limit area shows you some signs that the price is about to cap. Gives you the signs that the price is about to cap, or the price is about to do a rally base drop. That's what the price will be telling you mostly when you realize that we have a flag limit here. So as the price visits this base, then now you'll be anticipating the price to shoot up. So the flag limit, in theory, it tells you something, that the price is about to do a cap and it's about to drop. That's what the flag limit theory. However, we don't want to complicate life. We don't want to go deeper on the flag limits. We just want to deal with a flag limit that we can be able to trade and that we can be able to identify on the charts without any difficulty. So your stop loss should be below your kink area, and your target profit should be on this higher high. So take note, guys, that as the price retraces here, this should be a single candlestick. It should be a bearish candlestick, guys. We need just one single bearish candlestick. We do not want many candlesticks here that forms a kink area, otherwise it's going to affect the strength of that kink. So we need a kink of one candlestick, a reaction of one candlestick, or two candlesticks. Anything more than that, guys, we can no longer consider that as a flag limit, guys. That's the condition. So let's look at the terms and conditions for a buy setup. So the terms and conditions for a buy setup, there should be a resistance level, as I have alluded before. This resistance level has to be broken. Thereafter, the price should immediately cross the resistance line going down. This leads to a formation of a kink. A kink should be one or two bearish candlesticks. The price must approach a higher high thereafter. Price must create a higher high thereafter. Entry, place a trade on the king area. The price should approach the king with a PA, which is a price approaching. The stop loss, should be placed below the king area. The target profit should be at the higher high. I think I've explained everything here. So remember, guys, the rules, they are there to protect you guys. Follow the rules. Do not break the rules. If you break the rules, that's a disaster to your life. That's a disaster. Once you go out of the confinements of the rules, then know that your life is in danger. So guys, let's look at some chart examples. Some of you have been saying, why is it that you always, chart master, you give us examples of indices? Why don't you just give us examples of currency pairs? So for today, as I am concluding this course, I have decided to give you some examples on the Euro USD, guys. So we are on the Euro USD on the H1 time frame. So as you can see here, guys, on example number 1, the first and foremost is for you to identify a resistance level. So we had a resistance level here of 1 touch. So once we have this resistance level, and this resistance level is coming from a rally base drop. So what happened as the price was going towards the northeast kingdom, you can see that the price was able to break this resistance line. Once we had a break of this resistance line, the price was able to retrace back to this resistance level, and it managed to break the resistance level. So once we saw an engulfment here, the last condition was to wait for the break of this higher high. So the price will manage to break this higher high. So once you see this happening, then now you will be waiting for the price to come back. So once this condition has been met, then you will be knowing that more likely the price is to cap and go down. So this is what happened, guys. These are the conditions that you need to look for, guys. There should be a break of resistance, as I have said here, and that resistance is engulfed as what has happened here, and there should be a new higher high creation. So this high was broken up. Once we see that condition there, now we are just waiting for the price to return to this resistance zone, to this kink zone, guys. This kink, you can see. So usually, as I have said, that this reaction of price, it needs just one candlestick in order for it to be validated, or 2 candlesticks. So you can see here we have a bearish candlestick, and you can see, guys, the way you draw your king, guys, you include everything, including the wicks, guys, the whole candlestick, guys, including the wicks. Then you draw your zone. Once you draw your zone, then now you wait for the price to give you an approach to give you an indication that we are about to land on the airport. Once we see that condition happening, then we can be able to place a trade. Then you can buy here. You buy in the king zone, in the king area. So the price decided to approach this king zone in the form of a 3 drive. So there was a 3 drive here. So the price made a 3 drive, and that was a confirmation to us that that zone was going to hold the price. And finally, as we had anticipated, the price was able to hold the price. So your safest take profit should be on this higher high here, guys. So I don't know if your take profit may have been hidden or not, but this is the place where you put your safest take profit. And your stop loss, guys, should be just below the king area, below the king zone. So once we have an approach, then that's where you can be able to place your trade. So take note, guys, that the conditions of the flag limit might come to fluctuation here, and now you are waiting for a PA, and there is no PA that comes here. That is not a valid flag limit. Do not place a trade here. If there is no approach, you wait for an approach. Once there is an approach, then you can be able to place a trade. There are various approaches, guys, that happens in the market, whether it is a fake out, whether it is a compression, whether it is a compression plus liquidity. So wait for a PA. Once you have a PA, then you can trade it. I think it is clear to you. So here we are in example number 2 on Euro USD H1 time frame. As you can see, guys, here the first thing that you need to do is to mark your resistance level. We had a resistance level here, and you can see that the price, when it came to this resistance level, it was able to react. So we are expecting a red candlestick. So a red candlestick here or a bearish candlestick here gives us an indication that the price was able to react to this resistance line. And the reaction should be just small before the price decides to go up. So once you see this condition where the price was able to engulf the resistance line and the price was able to drop a little bit before creating a new higher high, before breaking this high, then we validate that as a flag limit. And once we see that condition, then now in our mind we are anticipating that the price is now about to flag. The price is about to create a flag. So there is a pole, there is a flag here. So as you know that this is what we call the flag limit area. Once we have this condition, now we know that the price is about to flag. And now the price was able to flag, and we can see that the price then came to this zone, the king zone. So you only place a trade on the king zone. As you can see, guys, that the price was able to approach this king zone in a form of a 3 drive. Remember, guys, no PA, no go. So the trade gave us an indication that we are about to land on this king zone. So once you see that reduction in speed, then you know that the price is more likely to respect that zone. So this is what we see happening. There was a 3 drive approach. Usually when I'm trading the flag limit, I like the 3 drive. Why? Because mostly it is the one that occurs. It is the one that happens. However, it's not only the 3 drive only. Sometimes it might be a fake out. Sometimes it might be a compression. Sometimes it might be a compression plus liquidity. So you put your stop loss just below the king zone. Once you put your stop loss below your king zone, then your safest take profit would be the higher high here. This will be your safest take profit. So that's it, guys, on example number 2. Let's go to example number 3. So in example number 3, guys, we are still on the Euro USD on the H1 time frame. As you can see, guys, what happened here, we had a resistance line here. Once we have a resistance line here, what happened? The price reacted to this resistance level, and it was able to break up this resistance level, and it dropped down. Once it dropped down, guys, we see that the price came back with a heavy momentum, creating a rally-based rally. So this resistance level was formed from a rally-based drop, and the price was able to break the resistance line, and it came again to engulf that resistance level, and the price was able to break this high, managing to create a higher high there. So once you see that condition happening, it is giving you a clue that the price is now about to cap. The price is about to make a flag. So this is a pole, this is a flag. So guys, as I have alluded, when we are looking at the theoretical application of the flag limit, as I have told you guys, we are not going to go deeper on the flag limit, otherwise it's going to confuse you guys. I'm just giving you some highlights of how this concept is powerful. It is very, very powerful. For the sake of simplicity, we are just going to keep things simple as usual. So you can see, guys, that when the price was coming to the kink area, the price approached the kink area in the form of a 3 drive. So we can see, guys, that there was a 3 drive here. So you would buy here and you put your stop loss just below the kink area. And as you can see, guys, the price managed to come and hit our safest take profit, where we put it on the higher high. Let's go to example number 4. We are still on the Euro USD H1. As you can see, guys, here, the first thing that you need to do as usual is for you to draw your resistance level, mark your resistance level. This was a resistance level, and what happened? The price was able to break the resistance level, and it retraced back before engulfing, before breaking this high, and the price was able to create a pull here to the upside. So guys, as you can see, this was a 2 candlestick kink. It was a 2 candlestick kink, guys. It had 2 bearish candlesticks. So if I have said before, guys, that it might be a 1 candlestick or there might be 2 candlesticks, you need to look for that. Once you see something like that, then you can be able to draw your kink. Anything above 2, guys, it doesn't qualify as a flag limit, guys. So those are the conditions that you need to look for. So as you can see, the price made a breakout plus engulf plus a new higher high creation. So as the price was coming back to this zone, what happened? The price made a fake out. How do we see that there's a fake out? As you can see, guys, here we have a support here. The price came here, made a support, came here to that same support level, 2 touches. The price came back to these 3 touches. So we have a 3 touch fake out. So once you see that condition occurring, you draw your line, and that becomes your fake out zone. and finally the price was able to make a fake out, going to the king zone, and you can be able to place a trade there. And if you check on this one as well, we had a 3 drive, guys. The market made a 3 drive. Usually the flag limits, they usually gives you a 3 drive approach. That's why I like the 3 drive approach mostly when it comes to trading the flag limits. And we can see that the price was able to make a 3 drive towards the king zone. So that's where you would place your trade here, and your sharpest take profit will be where the market made a higher high, and you put your stop loss just below the king zone, guys. So that's it on example number 4. Let's go to example number 5. On example number 5, guys, we are still on the Euro USD H1 time frame. As you can see, guys, here that we had a resistance level of 1 touch, and the price was able to approach this resistance level, and the price finally broke that resistance level. And before going towards the Northern Kingdom, the price was able to make a retracement, and when it made a retracement, it was able to finally break this high and went up to flag. So usually once you see a condition where price breaks a resistance level and comes back in form of a retracement before shooting up, then it's a condition that is giving you a sign that the price is about to flag. And finally the price was able to flag here, and you can see there was a cap on price where there was an indecision. So once you draw your zone here, your king zone here, you can see that this king zone was bigger. It was big. However, as for me, I would not have taken any trade here because the risk to reward ratio was not good, guys. The stop loss was very, very far away. What I would do here, guys, is to wait for an impactful pattern. I can see here there was an impactful pattern where the price made a quasi-model here. As you can see, the price dropped here and it created a quasi-model level here, and you can see that this was broken by price as the price came here. So I would be in a position to buy here and put my stop loss below this. So this is what I do mostly when I see that my stop loss is very, very far away. I wait for an impactful pattern to occur, either in that time frame that I am trading, or I go to lower time frames as far as M5, M15. Then I look for an impactful pattern to lower my risk. It is important, guys, that before you trade any setup, what you need to think is your risk. Think about your risk first before thinking about the profit that you may be able to benefit from that trade. As you can see, guys, here this was a 26-degree compression. We talked about that when we talk about compression, guys. So usually this was it's below 45 degrees, so it validates itself to be a good compression because it's below 45 degrees. So guys, you can see that the price was able to compress to the king zone, and you would place your trade here. And you can see also there is a confluence of a compression and also a fake out. So as you can see here, with one support 1, support 2, then the price finally made a fake out, and you buy here, guys. So that's it, guys, on flag limit. I hope you have learned something from this tutorial, as I've alluded before, that this standard operating procedure is the building block for our strategy at Chartmaster FX, guys. I don't know how many pages I can write explaining about the application of the flag limit, guys. It helps you to understand the movement of the market. So here I've just simplified things, and you can be able to trade this setup, and you can be profitable if you follow the rules when you are trading this strategy, which is one of the soldiers of the jungle. So guys, I want to thank you all for watching our videos. We are so glad about your support, about your likes, your subscriptions. We are so grateful. Don't forget to share the information with other people so that they can also be able to learn something, and that they can be able to improve in their trading as they concentrate in learning these standard operating procedures, guys. So thank you, guys. It's your boy Chartmaster signing out.